Once again, the DukascopyTV team bring you the week ahead, where we invite a guest to discuss the main data releases and news events that could shake up markets for the week beginning 27th of August. I'm joined today by Joshua Raymond, Associate Director at City Index, to give me his view on what we should be keeping our eye on. Mr. Raymond, thank you for joining me. What should analysts and traders be looking out for next week?
Well, obviously we've got the UK bank holiday on the Monday, so it kind of picks up speed towards the latter stages of the week. But economic data-wise, to keep an eye out for you, on Tuesday you've got US consumer confidence data out in the afternoon. That'll be an important element to watch. Later on, you've got Wednesday, you've got inflationary data out of Germany, so that'll help to shape what the ECB could do in terms of stimulus. And then also, you've got a second reading of US GDP for the second quarter, so we should see an upward revision potentially. Then you've got some personal income, pending home sales as well in the afternoon on the Wednesday. Later in the week, on Thursday, you've got personal income and spending. You've got the jobless claims as well, and in the morning you'll look at, or most of us will look at, the unemployment rate in Germany, and then also economic sentiment out of the Eurozone. And then to finish up on the week on Germany, you've got retail sales out on Friday morning, unemployment in the Eurozone, and then in the afternoon you've got errata data out of the US, so Chicago PMI will be important, consumer sentiment will be important, and also factory orders.
All eyes next week will be on Spain and looking for details of the country's bailout plan. Because of this, what can we expect to see from the euro?
Well, from the euro, I mean, we've had a decent week actually this week. So, I mean, for me, the key theme next week will be to see whether people start selling into the rally or not. And obviously, you'll be looking at the headlines out of the Eurozone as well. We've just had, obviously, at the latter stage of this week, you've had Merkel and Hollande talking, as well as Samaras. And so it's a question really for me is whether people use the rallies that we've seen this week as an opportunity to sell out of the euro. And we've already started to see elements of that anyway. So we are trading back above 125, and if we go below 25, then we could be looking back at 24.50 and then 124. So that for me will be the key theme, and obviously you'll look at the data to help shape that message. You'll also look at the headlines, and everyone's still looking towards Mario Draghi, and it's been over a month now since he said the faded words that he'll do whatever it takes, and we haven't seen anything towards quantifying exactly what that attitude is yet. So I think that'll be the key thing for next week in terms of how to trade the euro.
And it will be a very heavy week for US economical data, and investors will be waiting to see if there's continued weakness in the economy. What can we expect to see from the dollar?
Well, the dollar index has bounced off some support levels over the last couple of days, so it'll be to see whether those support levels around the 81.22 mark maintains, and obviously we'll be looking at data to help dictate whether the dollar still sees a bit of demand coming back in after a couple of weeks where it's been fairly bearish. And then the other element, of course, is Ben Bernanke, and we saw in the FOMC minutes they left the door open for potentially more stimulus. And next week we'll be edging towards the end of the month, where you've got the Jackson Hole Economic Symposium, and where central bankers all come together, and where we'll start to hear a little bit more about what that stimulus plan could look like, and that'll help to show how the US dollar is going to trade.
Thank you, Mr. Raymond, for joining me today. That's all from me, but click back Monday for all the latest financial and economic news. Have a great weekend.